Welcome to the deep dive. Today we're unpacking Snap Inc.'s Q3 2025 results.
Yeah, looking at the financials, the guidance, and their big bets on AI and AR.
Absolutely. So our mission.
Let's distill these numbers, pinpoint the revenue drivers, and really weigh the risks and opportunities heading into 2026.
Okay, let's jump right in. The financials. Q3 looked like a solid beat, right?
Definitely. Revenue hit $1.51 billion. That's up 10% year over year.
Which was just ahead of Wall Street's $1.49 billion expectation.
Right, but the bigger story, I think, is on the profit side.
Tell me about it.
Adjusted EBITDA, $182 million. That's a huge jump. A 38% year over year, blew past projections.
Wow. And they managed that while cutting losses, too.
Exactly. Net loss down 32% year over year, dropped to $104 million from like $153 million. Shows real financial discipline kicking in.
And that discipline translates to cash, presumably?
It does. Free cash flow was $93 million. That's up 30% year over year.
Okay, so that's key for you listening. It really signals progress towards sustained positive cash flow. That's the goal.
Yeah, and it clearly gave the board some confidence.
How so?
They immediately announced a new stock buyback program, up to $500 million of Class A stock.
Sending a signal about future earnings potential.
That's how I read it. Confidence from within.
Which maybe explains the Q4 guidance. It seemed pretty strong, especially for the holiday quarter.
It did. Revenue guidance, $1.68 to $1.71 billion.
So the midpoint, $1.695 billion, just nudging past the $1.69 billion analysts expected.
Right. But again, the real kicker is the adjusted EBITDA forecast.
Let's hear it.
They're projecting between $280 million and $310 million for Q4.
Whoa. Okay. The street was only at, what, $255 million?
Yeah, $255.4 million. That's a massive beat on guidance. Suggests these cost efficiencies are structural, not temporary.
Higher revenue and better margins. That's the combination the market loves.
Precisely.
All right, so the financials paint a strong picture, but that relies on the community, right? Let's talk user momentum.
Solid numbers there, too. Daily active users, DAU, hit 477 million. That's up 8% year over year.
And monthly actives, MAU.
943 million. Up 7% year over year. Still inching towards that 1 billion user goal.
And the engagement is still kind of mind-boggling. 1 trillion selfie snaps in 2024.
Yeah, the habitual use is definitely there. But the strategic focus shift is clear.
You mean average revenue per user? ARPU.
Exactly. Now at $3.16, they're clearly focused on monetizing the users they have.
Which brings us to subscriptions. Snapchat Plus E.
That's where the growth is really explosive. Other revenue, mostly Snapchat Plus E, was up 54% year over year.
Culling in $190 million in the quarter.
Yep. That puts it on an annualized run rate over $750 million. That's significant high-margin revenue.
Okay, so things look good, money's coming in, but then they dropped a warning.
Right. This is the twist. Snap actually warned that DAU might decline in Q4.
That caught my eye. You don't usually see social media companies signal contraction like that. Why?
Two main reasons they gave, one internal, one external.
Okay, the internal one.
It's a direct trade-off with monetization. They basically said pushing things like Snapchat Plus and the new paid memory storage plans. Well, it might hurt engagement metrics globally.
So they're potentially pushing out users who won't pay, trading scale for higher value users.
That seems to be the calculus. Prioritizing efficiency over sheer mass.
And the external factor.
Regulation. Specifically, they called out Australia's social media minimum age bill starting in December.
Ah, and that ties into platform-level age verification.
Exactly. They're preparing to use signals from Apple and Google to verify ages and remove underage users under 13 generally, or under 16 in places like Australia.
So compliance, even if it means a temporary hit to DAU numbers.
Right. Clean up the user base, focus on monetization, and then pour resources into the future.
Which is AI and AR. Let's pivot there.
Their lead in AR is pretty striking. 8 billion lens uses per day. Over 350 million people engaging with AR daily.
That scale is huge. And the Gen AI features seem to be landing well.
Definitely. Over 500 million users tried Gen AI lenses over 6 billion times. Things like AI face swap. 1 billion uses just in Q3.
And they just launched the Imagine lens for open prompt generation.
All setting the stage for the really big announcement this quarter.
The Perplexity AI deal.
Yes. This feels like a major strategic move.
So remind us, integrating Perplexity's conversational AI search into Snapchat chat starting early 2026.
Correct. And the financial part is key. Perplexity pays Snap $400 million over 1 year.
Wow. $400 million, mix of cash and equity.
Yep. Starting revenue contribution in 2026. Think about that number. It basically covers their recent annual net losses for several years. It's a huge validation.
Strategically, what does it signal? They call themselves a leading distribution channel for intelligent agents.
It means they're shifting. Instead of trying to build all the AI themselves, they're leveraging their massive, engaged user base, especially in chat, and renting out that access.
So they become the gateway, the storefront for other AI services.
Precisely. It diversifies revenue beyond ads and makes them a potentially crucial partner for anyone wanting to reach that young demographic with AI tools.
Smart. Monetizing distribution, not just eyeballs.
And it's not just about the phone screen either, right? There's the hardware base.
Specs, right. They launched SnapOS 2.0 in Q3, next-gen specs coming next year.
Planned for 2026 debut, yes. And they're already building the monetization layer with the Commerce Kit for specs.
Letting developers take payments directly within lenses, buy digital goods in AR.
Building the infrastructure for that future AR economy now.
Okay, so these big bets need funding. Let's circle back to the core ad business. Is it strong enough to support this? What's driving that 10% revenue growth?
It's mainly direct response, or DR, advertising. Ads focused on actions like purchases.
That DR revenue was up 8% year over year.
Yeah, and accelerating. Up 3 points from Q2. A lot of that comes from better attribution, proving to advertisers that the ads work.
And that shows up directly in purchase-related ad revenue, up over 30%.
Exactly. They're getting better at showing ROI. Plus, they're using AI internally for ads too.
Like the dynamic product ads.
Right. Using large language models, they're seeing like 4x higher conversion rates in some campaigns. AI optimizing the ads themselves.
Okay, so who's spending this money? Is it broad-based?
Mostly SMBs, small and medium-sized businesses. They're driving the overall growth globally.
But there was some softness, wasn't there? North America?
Yeah, North America ad revenue growth was only 1% year over year. The issue seems to be a slight decline in the large client solutions, the LCS business, the big brands.
And that's concerning because LCS is still a huge chunk of revenue.
It is, still 43% of global revenue. So any pullback from big advertisers is felt. They're still fighting Meta and others hard for those big budgets.
But growth is accelerating elsewhere, Europe and rest of world.
Right. Europe accelerated to 12% UI growth, rest of world up to 13%. So better geographic diversification, which is healthy.
And new ad formats are working too.
Seems so. Sponsored snaps showing like 22% more conversions, 19% lower cost per action.
Real world impact too, like promoted places driving foot traffic.
Yeah, double-digit lifts in tests. Panda Express saw a 15% incremental visit lift. And the app Power Pack is boosting app installs significantly. Concrete results for advertisers.
Okay, so pulling this all together, the core tension feels like financial discipline and innovation versus potential user headwinds.
Exactly. They're showing real progress on profit, making bold AIRR plays like that huge Perplexity deal.
But at the same time, they're preparing everyone for maybe fewer DAUs because of monetization pushes and regulations.
Creating scale for efficiency.
So the big question for you, the listener, to think about is, with ARPU climbing, with new high-margin streams like Snapchat Plus and this Perplexity deal coming online, does a potential short-term dip in DAU really matter for the long-term value?
Yeah, is Snap successfully making that pivot, moving from just chasing user numbers to chasing efficiency and high-value engagement? That's the transition to watch through 2026.
A great question to end on. Thanks for joining us for this deep dive.
Catch you next time.